Okay guys, so today we're going to analyze again ahead of this week what we expect in our market. I understand when you check your trading view, the economic calendar, you will again, time is always on New York time, Standard Time. So this week, coming of this week, we have on Wednesday, November 13th, we have very high import red files news. We have a CPI news, core inflation rate, and on Wednesday 8:30 Eastern Time. We have PPI on Thursday, and of course, so that on Friday we have retail sales. So again, we will expect market to be very volatile coming this week. So what we want to analyze is what we expect coming this week. So I'm gonna take you back to our treasury note again, barchart.com. Just click open your Chrome or whatever you used for browsing. Just type barchart.com and it will bring this one. Okay, so you can always chart there bar chart to get select barchart.com commodity stocks, then come here and select a commodity. We will have this we are going to choose a 10-year treasury note, this one, financials 10-year treasury notes. And again, open interests, you must make sure these open interests, the values within the open interest is high enough during that period when you want to trade. So you are going to click on interactive chart. Okay, so this is okay. I've how you can bring this is my treasury note, 10-year treasury notes, and below here we have a US dollar index. This is my US dollar index. So you can always click there so that you can compare symbols. You can add another. So mine, we have a new DXZ24, which is a symbol for US dollar index, and I've put it in a new plane so that okay, no problem. So this one, so this is what I'm noting in this price action, this chart of mine. And again, we have these relative equal lows. Which are created by the 10-year treasury note. I'm going to increase the font size and change the color to green. Let me use green. Bye. So we have liquidity, and areas of liquidity, that's where those institution levels try to target as interests. So market always tries to follow interest rates, and in each and every country we have it offers bonds and treasury to those investors. Like for example, in Kenya we have KCB, we have those commercial banks, we have those bigger companies which are not retails. So So those bigger companies tend to invest with the government through treasury bonds, because treasury bonds, again, they are secure, they are safe. And you see, in forex trading, that's normally what happens. Market tends to gravitate towards interest, and this is what we use so that we can determine those area of interest in our chart, so that we can align ourselves with institutional banks. And again, price action, market is always fractal. PD areas are always the same area, highs, lows, areas of inefficiency, gaps, again relative equal lows, relative equalize. So that's where our interest will be targeting upon. That will be our target for interest, right? So I'm marking this relative equal lows again on the 10-year treasury note, and this is, you see, it was created a low here, a low here, and a low here has been created. So which means we have a very, very, very strong level of liquidity, and market will try to target those liquidity. So this is a treasury note, and you can see on our US dollar index, the US dollar currency, it is measured by the dollar index, US dollar index chart, because that's the US dollar market. It is the one which is going to measure the value of a dollar. So again, we focus mainly on the US dollar index, and then from the analysis of our US dollar index, now we can analyze other charts, like other currencies like Euro USD, other currencies like British Pound USD, other currencies like Japan yen, and the rest, and the Australian card, those ones. So we mainly focus with the US dollar index. We analyze our market with the US dollar index, then we can align ourselves, then we can trade off other currencies. You know that US dollar index, it is inversely correlated with other currencies like Euro USD and British Pound USD. One tends, when one is making a bullish move, the other one is making a bearish move at the same time. When one is making a, for example, when US dollar index is making a bearish move, expect Euro USD to make a bullish move. Okay, so you can see US dollar index, it is inversely correlated with the treasury note. Again, treasury notes are directly correlated to the Euro USD, which means they move the same direction, and which makes the US dollar index to inversely correlate to the treasury notes, which means when one market is going down, the other market is going up. And there is an important factor which I want you to note here, is what we call SMT. SMT meaning these markets are supposed to move simultaneously. Okay, symmetrically. In short, they are supposed to move symmetrically, which means when one is going down, the other one is supposed to make a point which is symmetrically equal to the other market, the other chart. For example, okay, let's take this high is the same as this low. This low is the same as, okay, this high. Again, this one, this low is the same as this. You see, they are symmetrically, they move symmetrically. So when we have an asymmetrical which move which we are going to note in this chart, it will indicate that we have an area of distribution or area of accumulation, which means like those big institutions, they are about to make a major move in the market. They are about to make a major move in the market, and that's where those institutional banks or levels try to align themselves with the algorithm, and that's also where you as a trader, you are supposed to align yourself with those big institutions so that you can capture those moves when they happen. For example, we had this low and this high. Again, you noticed this low was not broken down around this region, but this high was broken. You see, it was broken above, so liquidity was taken there, but here we didn't take any liquidity. So we had an SMT here which contributed to market moving upside, and here market after an SMT we had a downward movement again around this region. If you check, you will see an SMT. Market came and took liquidity around this region, creating a lower low, but here it didn't create a higher high. We had an SMT. You see, asymmetrical move in the market indicates area of accumulation and distribution. Again, our current levels, what are you noticing? Ahead of elections, we created this one. This is what I'm noticing at this moment, where these lows were taken. We created a lower low, but we are not creating a higher low. Take out this high, which means this is an SMT, and we have relative equal lows, areas of liquidity. So expect shorts with the British pound USD or the Euro USD, and expect bullish opportunities with the US dollar index. So first of all, this is where you are supposed, you have to do a lot of research and make sure that everything comes into place before you decide and go into market and trade. So I'm going to analyze I will go back to our chart, the US dollar index. So this is our monthly. This is our monthly time frame. What I'm noticing at this region is that we have this inverted fair value gap, this one, which was overlapped by this candle creating another. So this region, this is what we call a balanced price range. So traders below this region, they are trapped. Yes. It's like they are trapped traders, which means market does not need to come below this, to move down below this region. And this is a sign that we are currently on a bullish opportunity on the US dollar index. Again, we are going to move down into a lower time frame, the weekly. This is a weekly time frame. Again, we had this inversion fair value gap around this region, and this inversion fair value gap, market closed above it and retested that inversion fair value gap, and it is currently going upward. So which means we are currently on a bullish opportunity, whether you like it or not. So when we move to a lower time frame, so you see what the market is trying to, okay. So this, we have another gap here, which is a region where we can expect price to retest back, but again time comes first before price. So